Hey, I want to thank everyone for tuning into this video. I just want to give a heads up that this video is a bit longer than I intended, but it is packed full of good information. So make sure you give yourself enough time to learn this information. Grab a pen and paper so you can write down some notes or whatever so you can really retain it. And if you have any questions, hit me up. And yeah, let's go ahead and get into it. Hey guys, welcome back to the channel. This is episode 3 of the Forex series, and today we will be discussing like some beginner tools, things you can use to start developing your strategy, your trading strategy. I'm basically just going to go over how to read candlesticks briefly, and I'll provide some sources that you guys can check out to learn about them more in depth. Gonna probably go over doing a little bit of support and resistance. That's where I always start my analysis. So I'm going to kind of teach you guys my trading analysis step by step and how I do mine. And by the end of this series, you guys will understand how I trade. And full disclaimer, this is just for educational purposes. I'm not responsible if you lose any money in the markets. I want to let you know that it's totally possible to lose your money doing this, but you can totally make 10 times the amount of money if you really put the effort and work in. But I'm not going to get into that right now. Today we're going to focus on the candlesticks. I'm going to go ahead and get it open. All right, so open up tradingview.com, or you can use MetaTrader 4, and that's this thing there. If you don't know what that is, go check out my first video. Basically, talk about how to get your broker's account set up and getting a MetaTrader and all that, and logging into your demo. I don't know if I went in full detail on it, but if you guys need more information, then I can provide that. But there are countless resources online. So you just go ahead and dive into your chart, and the chart I've been looking at lately is Great British Pound versus US dollar. Refer to it as GU. So if you hear me saying GU, I'm referring to this pair. This is my go-to one right now. I've been really focusing on this one at the moment. But yeah, let's go ahead and dive in. So first thing you guys need to know about your charts is that these little candlesticks, they all operate on the time frame you decide. Currently it's set on a 1 hour time frame. So each candlestick shows the movement of price within that 1 hour. I have like this huge candle here, so price moved a great amount within this 1 hour, but let's say compared to here, let me zoom in as much as I can, but compared to here, say, or even actually probably here's a better example, price barely moved compared to this big amount here. And the way people trade is they basically see these candlesticks and they put each individual, so it's a visual representation of what price did, and it eventually starts to draw a picture over time. And you can kind of see if price is moving upwards at a slow trend, or if price is moving up at a quick trend. But and another thing to note about time frames is usually with smaller accounts, people tend to scalp or trade just like short periods of time. Because if you're trading over the course of, let's say, you can get your roller tool to check this out. This is the course of 6 days and 5 hours. Your account may not be able to handle the drawdown that you may come across when trading these long time frames. So we have what you say scalpers or just day traders. They target small areas. So let's say we're only working within this zone here, trying to make some money for the day instead of like trying to work in the zone of all this stuff, XYZ, if you guys know what I mean. So I can show you guys what price may have been doing for like this last hour. So since this is an hour, let me hide all my drawings. Let's see. You can highlight it. I may have to remove that. Hey, actually, I'm going to go to another pair that I haven't marked up since I don't have to delete. So I won't have to delete my drawings because I'm currently waiting for a trade on those. All right, let's see. I don't mind removing all drawings from this. All right, cool. All right, so for the indicator, I already show you what price could potentially do within that 1 hour. But let's say you want to break it down and you want to look at the patterns within this part of the pattern, this candlestick. You can break it down by a time frame. So you can break it down from 1 hour to 15 minutes. And for this course of time, price still traveled in that range that we highlighted, but it shows what it actually did first before it went back up. Because it's hard to say. Let me go back to the hour to show you. So we have 1, 2, 3, 4 candlesticks will make up the 15 minute. And so we go back to the, or to make up the hour, I apologize. So price is currently here. So it looks like price just went straight down, came back up to where it is now. And if you want to know for sure what it did, price, yeah, basically for the last 4 candlesticks, price went down and came back up to where it is, just a little bit lower than where it started. So that's how you work the candlesticks. And the candlesticks have these things called wicks, which are these vertical lines coming out of the body of the candle, which is the solid color part. The wicks basically show where price opened and closed and where it was. So on this candle we're currently on, price came down here, but price is currently all the way up here. So price didn't stay here, but price, if price did decide to stay there, then we would get a solid color. So price actually closed there. So coming off of your last candle, moving to the next, you have what you would call your open of the candle. And then your close will be on the opposite end, and vice versa for a red candle coming in from the top side. This is your open of the candle. And wherever the bottom of the solid body ends, that is the close of your candle. So that's just showing where price ended up. So if you see something like this, it shows rejection. We get into that in a bit more detail. So these wicks kind of show rejection. Price went down there, came back up close here. Went down, came back, closed up here. So showing price doesn't want to really go down here. So yeah, just keep that in mind. It's not always black and white like that. Usually that isn't the case. We are on those smaller time frames. I notice when you go on a smaller time frame, you tend to see a few more wicks. So I have an easier way to show the open and close of price. We can go over to the bar chart. This is something I believe like the US came up with, but not many people use it. But it's a bit easier to understand opening and closing of the candles looking at it like this. So the green ones show all of our up movement. Red is down movement, if you haven't noticed. So you can see prices opening up here or closing at the top side of the green candles and then opening at the bottom where it connects. But this little stem, that's basically our wick on the candlestick chart. And price went there, but came back up here, closed there, and then moved on. So if you have any questions about that, hit me up or link a video called Understanding Japanese Candlesticks. It'll go in it, a lot more detail on it, and you can understand what's likely to happen if you see a specific candle in the market. So that's pretty much it for the candlesticks. All right, and that's for my analysis. I tend to work top down from my analysis. I start at the daily chart just to get a really big picture of what price is doing. So each candlestick is a day. I want to see what price did for that day. Yeah, I want to see what price did for that day. And I'll start to draw what we call these ranges, or like these zones, support and resistance zones. Is basically showing where price where it continuously stalls at some point in time. Like remember we talked about the wicks and the rejecting a certain price point. You can see that in the market, like visually. You can see we have wick here, wick there, wick here. So prices, when it gets there, it tends to struggle, even coming in from the top side, coming down. I can zoom in some more for you. So some of you looking at this, it may look a little intense. So what I even do, even when I'm doing my analysis for my support and resistance, I will turn my chart view on over to the line setting. That's a lot easier on the eyes, and you can see where we have a lot of consistent peaks at one price point. So I just go on my daily chart, zoom out quite a bit, see as much data as I can without making it too compact. And I'll get my horizontal line tool. And I'll basically just see where peaks are consistently hitting in the market. Let's find a good support and resistance. So about, let's see. Yeah, I say that's a good point there. And one thing to notate that these are zones, and price can push through it a bit and then come down. It's not going to necessarily stop exactly at that where you have all those consistent peaks. Like you have some surpass this limit, or some may not even, they'd be like very close to touching it, but won't touch it. So I can show you all the touches I'm looking at here on it. I'll start from left to right. So these two shot through a little bit. This one hit, this hit, 1, 2. Nothing else there. One hit there, one hit went through there, 2 there, 1 there from the top side. This one's close. That one retraced and went down. A few there. And to really know if you have a good support or resistance zone, you can go even further back to see if history kind of stalled there before. So you have a few there, one there. And I think like the steeper the peak, the more the stronger it is, in my opinion. You guys have to test that yourself to really see. So to basically get it drilled in your mind, when you see these zones and to not focus on the hard line necessarily, you can draw a point with the rectangle box and then kind of stretch it to get every single one of those wicks. Now you have a lot more accurate idea of where price could potentially go. Stretch that all the way down. Let's see. So now you can get all those ones that was pretty close to touching it in that zone. So, you know, price is doing a lot of reversals here over time. This is just on the daily chart. So this is a large picture. So when you start heading towards this this resistance zone, so when you're coming in from the bottom side, it's called resistance. Here, I'll leave a note on that. Resistance is like your ceiling. And your support is your floor or your bottom. Yeah, I should probably swap that. So, and then you'll go back. So you could go check it. You don't have to spend too much time doing this. This is just rough. You don't want to be too focused on one like tight zone. You got to be able to give yourself a little cushion around your zone. This is a pretty wide zone, to be honest, but for the sake of the video, we're just gonna go ahead and get on. You guys can take your time drawing up your support and resistance to make sure you have quite a few touches on it to support your idea. So you can do your other one. So now we have our resistance here. Let's zoom it in now. All right, so now that price is down here, we're now pushing up into a resistance zone. And price, as you can see before here, shot through this resistance. And now this resistance will become a support from the top side. So price can reject it coming in from the bottom, or it can from the top. And keep in mind that it is a zone. It could push through quite a bit. It could be a few days that it stays in that zone, but to catch those big moves, this is what you're looking for. You want to use your support and resistance. You don't necessarily want to trade when price is doing a lot of up and down. That's called consolidation. Let's see. So basically, I'll draw that. But currently, I use the hard lines just so I can simply add notes on it. I'll show you guys what I'm talking about. This is totally up to you. So I'll say like my daily support, so that I know that I'm on my daily time frame. And so the higher the time frame, the more strength it has. That's just the way it is. Price is more likely to go with the higher time frames versus the smaller. So if you have like a contradiction between your analysis on a larger time frame and a smaller, then you kind of want to trade in the direction that the larger time frame is going, because price is most likely going to follow that. So make sure you keep that in mind. So yeah, so you can either use hard lines or you can use the zones. I say start with the zones for now, just so you can remember that price you got to give it some cushion, because if you see this hitting here exactly, you're gonna expect price to hit here exactly. Although it did kind of reject off of it, but you see we have a few wicks on there, so that's that cushion I'm talking about. So it's a zone. You can see it a lot better with the candlesticks. And so we did all this on the bar chart, on the line chart to show the points. And now that I'm looking at it, we see a lot of rejections from the candlestick wicks. This is what you'll be looking at the chart most of the time as the candlesticks. So yeah, so that's a pretty good support and resistance zone. So don't stress on it too much. Just throw it. If you see like you got to move it a little bit, do it after the fact, and do yourself a favor after spending all that time making sure that it's all lined up. You want to lock it, because if you don't lock it and you're scrolling through and you accidentally move your bar a few times and you, I don't know, you try to undo it, but it doesn't work, or I don't know. So basically just lock it so that way you can't accidentally move it. and those are locked in for you. So that's basically it for the daily. So you can move down. So I usually start with the daily time frame, then I hop to the 4-hour time frame. I mainly only use like 4, maybe 5 time frames, depending on what I'm doing for the day. And you can basically go in here on the 4-hour, zoom out a little bit, put it back on your line chart, and see where you have a few more touches. Surrounding price, you don't want to go like way up here doing your 4 hours and stuff, like even your dailies, because price is going to take forever to get up there. Just to give you guys an idea, get your ruler tool. So from September 20th, it took all this time just to travel up there over the course of like 9 days currently where price is now. So yeah, even with your daily time frame, you don't want to spend all your time doing your support and resistance where it's going to take weeks before price even gets there. So do like 2 levels outside of where price is. So you can go 2 levels on the top, 2 levels on the bottom. This is where price is currently at. You see price counting down here. That's where price is. So do probably 2 daily levels above that. So that way when it does break, you have an idea of where it's going. And if you have a good daily zone, then it'll take a few days for it to break out of that zone. But if you haven't your zone being struck through so many times, like just within the last few days, and I don't think that's a good daily zone. So you guys are kind of getting a good idea of what works and what price tends to respect for the time being. You got to really consider how long you're planning to stay in the markets trading. Yeah. So that's your daily support. And this is actually, I apologize. That's my daily resistance because price is below it. Remember that resistance is that ceiling. And the way I remember that is basically just thinking about the Ford Focus RS. I just picture the R coming first. So I just put the R on top and resistance support. That's just how I remember it. And this is my daily support. Ooh, that's not English. All right, cool. So basically you go there, that's 4 hour. We're still on the 4 hour. So I'll kind of like zoom out from where we are just to see these smaller zones where price may just kind of like slow down at and then maybe continue through. Let's see. I would say about here. That's a good zone. You have one touch here. This one kind of went through. You have this touch from the bottom side. Let's see. This one kind of went through a little bit. This touch, that touch. So I think that's a good 4 hour zone. You notice it's a lot smaller than my daily zone, but you guys will see the difference between the daily 4 hour as you're marking it up. You have to do this yourself and practice a little bit so that way you can see it a bit easier. It took me a while to be able to see these quickly. I'll like spend probably 5 minutes on a line, but you don't want to spend too much time on that because then you'll stress it and because it's not going to be perfect and it will never be perfect. I just want you guys to know that. Just get as close as you can. Don't spend too much time. Get as close to the zones because remember, it is a zone. So you have some cushion. You don't have to be perfect with it. But the better you got, the longer you take doing this stuff, the easier everything else would be to an extent. So you don't have to, you can really trust your zones. So do what you have to do. Daily, Then I'll do like 4 hour, where is price right now? Oh yeah, I'm on this line. So 4 hour support. And then I'll either change the color of the line or I'll change the color of the text so that way it pops out a little bit more to me. And now we have our 4 hour support, daily resistance. Then we'll have our 4 hour resistance. And honestly, I would probably be good. I wouldn't even have done this daily. Well, actually, yeah, I would have done this daily support. And I would have done, so I would have definitely done this daily support and this daily resistance and maybe even consider doing one more daily resistance. So that way, do one that is close to, if it's not in the middle of two, you guys will kind of see. So this is my 4 hour resistance. All right. And let's say we just do a daily up here. Just going to throw it somewhere. Actually, I think that's pretty decent. We have touch almost there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I did this on the 4-hour chart, so it's showing me these smaller movements, which kind of conflicts with the daily, but I'm just doing it for the example. So daily resistance. And you can say like level 2 if it hasn't surpassed 1 or something like that. Just whatever. This is all how you want to do it. This is just how I've come to do it. I just found out about this trick the other day, so that's why I stopped drawing zones, so that way it's a lot easier to see on the chart. And yeah, pretty much it. You want to keep your stuff as simple as possible. Don't overcomplicate it. That was loud. So you guys go to the candles, and if your price looks like it's like really compact, you just scroll up on your mouse, and then you can pull this up too to get a little bit length on your candles to see exactly what it was doing. So, and the way you basically trade within support and resistance alone, you see price bouncing off the bottom. It's in some cases, it's likely that it will start to head up and shoot for your daily resistance. It's not that simple. I want you guys to remember that it's not that simple, because just simply, I'm going to go into a lot more detail on it, because the Forex market is manipulated by banks. This is how they make their money. They basically trade against everyone else, like retail traders, which would be me and you. The banks are looking to make money off of us, so you have to understand that they'll push the market in one direction and make you think it's going the other way, and then they'll pull it down because you're providing the market liquidity if they were to stop you out. We'll get in detail on that. That's called institutional trading, trading with the banks and larger institutions, so that way you can see the traps in the market that most retail traders fall for. So yeah, it's pretty much that. But yeah, you see price, if you have a good support and resistance zone, you see price push through sometimes, but it comes back in the zone, bounces in between it. Then you have a good support and resistance zone. So really, really practice that. That's the very first thing I think any profitable trader does before they do anything else on trading. I mean, they can open their charts and they can peek at it and like, okay, price is doing this. At some point, if you do this long enough, you can kind of remember your support and resistance levels. Some people work off of quarters theory, or it's basically they put their support and resistance at like every strong quarter mark. Like let's say, so they'll do like 1.72, then they'll do like 1.72250, 1.72500. So like every 250 or whatever, the decimal place changes on the currency pair. So this one has 4, or no, this one actually has 5 after the decimal place. Some of them are 4, some are like 2. So that can change, but you'll see like every strong quarter, like they'll put their support and resistance there. But I personally go off with support and resistance like this. Remember, you see them as zones. You just gotta remember that prices may eventually come back to here if it's looking a little indecisive, or not indecisive, but price is just moving. You have another support and resistance zone here. Price is just bouncing in there. So it's just visualizing it for yourself. You may be able to see this eventually without the lines. So yeah, just keep that in mind. So start your analysis with this. And then we'll dig into some more strategy stuff in the next video. I kind of touched on institutional trading. You can look all this stuff up. I do want you guys to do research outside of my video. This isn't a know-it-all place. This is all this information I'm giving you is after hours and hours of research for the last like 3-4 months. I've only been doing it for a while, but I have learned quite a bit. So I'm just trying to catch you guys up where I'm at pretty quickly, so that way we can all move and grow on a lot quicker. So yeah, in our next video, we're going to talk about like uptrends, downtrends, retracements, the Fibonacci. We already kind of touched on the retail institutional trading stuff, but we could go into a bit more detail. And with that comes learning about liquidity, which is a very important aspect of it. Just to touch on it briefly, liquidity, I mentioned it earlier, banks are looking to take your money. Like they'll push price to this point where it's looking like it's struggling to break or whatever. And then they'll go the opposite direction, not too sure how it works technically, but they'll push price in one direction and stop you out, and then price will move in the direction that it intended. So we'll go into that a lot more detail. It makes a lot. I cannot talk right now. It'll make a lot more sense seeing it and going over it in detail. This may be like a 3-part to this series because it is a lot to know, and I'm just gonna try to give you guys like curriculum to go off of, just stuff to look up and study. Try to avoid trading with a lot of indicators at first. Eventually, you'll find indicators that work for you. Yeah, but the indicators can bring a lot of noise to your chart, and it can bring confusion, especially learning at first. Like with these support and resistance zones, you have like some crazy indicators out there. Let me just find something. Can do like MACD, this. You got your moving averages. RSI, I used the RSI pretty heavy when I first got on here. Yeah, just, I don't know, some random stuff. And you'll be using this as a confluence with your trading strategies. First, you want to learn how to trade the charts naked, not with all these indicators. And once you're able to kind of see what price is going to do, instead of looking through price to see where it's been and stuff like that, you could kind of be like, okay, I have this moving average. So price kind of was down here first, slowly, then it worked its way up into this zone. It just gives you like a broad perspective of like what was going on. And some will even try to predict the future and tell you when to look for sells and buys. The thing I noticed with most indicators are that they are a bit laggy. So it's just best to learn to trade naked and use indicators only as a confluence. A confluence is just something else that confirms your analysis, just trading the charts naked. So you don't need all that stuff, at least at first. See what works for you. I don't recommend trading based off of indicators specifically. There's no magical indicator that's going to be right 90% of the time. Some are out there, but they will be a little late to the party, and you can miss out on a lot of money. As far as indicators, the only 2 things I really use currently is like my day of the week thing here. What pair am I on? GBP CAT. So I basically have my Sundays purple. I don't necessarily memorize the colors of the other days, but I just make them all contrast to each other so that way I can see, okay, Sunday, Monday, Tuesday, Wednesday. All right, so Wednesday price did this, and you can look for pivot points in the market certain days of the week. If you're trading a Monday, you know market is likely to fake you out, or it can just be a day that consolidates where it doesn't move. Last Monday tended to move a lot, but this Monday they usually tend to consolidate. So it just kind of keeps you grounded. That's what I do. Plus my trading, I target certain things from the previous day. I can go into that. So that just helps me a lot. And I don't keep that on all the time. I'll just pop it up if I'm forgetting what day I'm on, and when price decided to turn around for that day of the week, then you can just close it off. I have one for the sessions, and my other indicator would be the sessions indicator. There are a bunch of different ones that run by similar names on here, so just find stuff and see what works for you. But this is the one I use. It's called Sessions. It basically shows you the Asian, London, and New York session. I don't trade the Asian usually, so I don't leave that one highlighted, but I have my London session green, my New York session blue, and where you have this difference in color, that's just the overlap between the London session and the New York session, and that's when the market tends to be a lot more volatile. You can see here in the sessions it's moving, here in the sessions it's moving. So if I'm like trading, and sometimes you see a reversal point moving into the next session, so you can incorporate that in your analysis. That's something that happens a lot. So see, moving over to that New York session, you start to see those reversals is very consistent. So this is something else that keeps you grounded, just as your support and resistance. I can't speak on it enough. You really want to trade within these sessions and learn the market's a lot more volatile. You make your money quicker, and and they pretty much set the pace for like what the market is trying to do for the most part. Let's see. And as you can see, towards the end of the New York session, price tends to consolidate before it moves into the London session and boom, breaks out hard. Sometimes it'll break out a little early. Sometimes it'll break out a little late. This one moved pretty heavy right before the London, and then London continued to move even stronger. So you could change the colors on these. You could change the opacity to make it a bit easier on your eyes. Like while you're trading, you could leave this up all the time. I did initially. You just turn it down to where you can barely see it. And that's something that just keep you grounded, but I have it kind of like there because I tend to turn it on and off. I just want to be able to see pretty well. Yeah, I know I'm going over quite a bit. But if you have made it this far in the video, leave a fire emoji and I'll leave you guys some love or something just to know that you actually made it through the video. I'm going to be dropping a lot of info-filled content for free, so that way you guys can learn how to trade this stuff. It's pretty fun learning it all. It's a pretty good challenge. You continuously learning that it's more that you have to learn. So it's not as easy as many of you think, at least that I thought it was. So don't underestimate the market. Give yourself time to learn it and practice this stuff. And I'll show you guys one more tool before we close out this video. And it's probably the most important one of all. Just so we're clear, I do my analysis in TradingView. I don't know if I mentioned that yet. I do my analysis in TradingView, and then I'll hop over to MetaTrader, and then I'll input my numbers or whatnot, and actually implement my trades with my broker through MetaTrader. TradingView is more so for my analysis, but if you do have a broker that is supported by TradingView, then you can actually trade within TradingView, which would be awesome. But I don't mind using the two different apps. Plus, I think the requirements for those brokers, the account sizes are pretty large for most people starting out, depending on your capital. So yeah, really look into the sessions. That one will help you out a lot, even if you don't necessarily want to mark the days of the week. At least if you do days of the week, just mark your Sunday so you know what's setting the pace for the week. Or you could just go to your weekly time frame and see what the price is doing for that week and get a good idea. Turn off your sessions. Some price moved down this week, up this week, up. So you guys will kind of figure out what works for you. You're going to see a lot of different strategies out there. And remember, try to avoid those indicator-based strategies at first, because it kind of hinders your growth at first. That's because that's what I was doing at first, trading solely based off of indicators. And there's like a million different strategies for the same indicator. So because people add it to other confluences, or they add it to like their strategy, and it just throws you off trying to learn it, especially from many different sources. Let's see, let's go back to like a 5 minute. Price is like really flat here, so just remember, go over to your price thing, stretch it out till you get those candles long. Playing around with this software, you guys will kind of understand. And also make yourself like a little favorites thing here. You just find a tool you like, and when you click it, you just put a star next to it, and then it'll create this window, and these are your go-to tools. We'll get into the Fibonacci. Yeah, that's pretty much it in this tool. You guys are gonna love this tool. This is the money maker. Oh yeah, and so my most favorite tool in TradingView would be the replay tool. You can use the replay tool, which I believe isn't with the pro. Just go double check that yourself. But if it works free, then why not? All this tool allows you to do is to move further back into a certain point in time to look at price. And then you can test the strategy that you have come up with to try to predict what price is going to do just by slowly skipping one candlestick ahead at a time. Or you can just have it automatically play at a certain speed. This one's like every 2 seconds. It's going to give me a new candle. And then you can go out here, adding your positions and whatnot. And then, I don't know. So boom, I would have got stopped out. So you test your strategy, write notes why you lost, go back and look at, do your top down every time, start your higher time frames, your daily, work down into this point to see why you're wrong. There's a reason why you're wrong in the market. The market isn't random. Like occasionally it may be random, but price is not random. Everything is happening for a reason. It could be for a news event. It could be for a technical reason that you may have missed while doing your analysis. So you really want to look into that pretty heavily. Yeah, so definitely test the replay. I think that's even more important than trading demo, because the demo, you're waiting live. Like, can you imagine actually sitting here you coming up with a strategy, testing it out, you have to wait over the course of, let's get my ruler tool, over the course of like, let's say all the way to here, course of 2 days, 5 hours and 10 minutes, just to see if your strategy worked, when you can just go back test it, mark up your positions, something like that, and then play it. You can skip it yourself, you can click it, you can know within seconds if your strategy worked for you or not. You can know, learn where to put your stop loss, learn where to put your take profits. Like, just do that over and over and over. Like, I kid you not, I started on GBP USD. I went all the way back to like 2017, and I went on probably the hourly and 4-hour time frames, and I was just going through it and just like trying my strategy out. And you can only go a certain point. You can only go so far back in time on the smaller time frames, because it's a lot more data for the software to compute. So you can only go so far back, the smaller the time frame. The bigger the time frame, the further back you can go, if that makes sense. You guys will see that while you're back testing. Yeah, you can know within like minutes or seconds if your strategy worked for you. You can do it hundreds of times, and you can know where your entries are. But you got to remember that this is over the course of like a long amount of time. So you have to remember that when you're actually going over to your demo or your live account, that you have to be patient and wait for your strategy to play itself out, because you've tested it hundreds and hundreds of times. So really trust what is happening in your back testing, and then implement that in your demo trading, and then push that over to your live trading once you're profitable and consistent. And then that's all there is to this, honestly. And I'm going to give you guys some tips on some things to look out for in the market, and a few more tools that I use and resources. And you guys can use this to your advantage to become a profitable trader. This is just going to be basically a place where you come to get the curriculum and then sources that you need to learn this stuff. And then you guys do with it what you can, and help others, teach others. And yeah, so that's pretty much going to be it. I want to thank you guys for tuning in. This has been a long video. So thank you guys for watching, and I'll see you in the next.